So from AI to payments, I think that to cross-border payments is an interesting topic. Payments, especially cross-border payments, has been fragmented, and there are a lot of inefficiencies in the entire payment value chain. In fact, G20 has a target of reducing the cost of remittance to 1% by 2027, right? And India being one of the largest remittance markets in the globe, this also makes it more important to discuss how this landscape is evolving. There was a recent report by International Monetary Fund where the report talks about cross-border payments being a quadrillion evolving market where cross-border payments touched close to $1 quadrillion in 2024. So with this particular context, I would like to begin today's conversation with Nandini first. Nandini, you being from SWIFT, what is the role of SWIFT in ensuring the goals of G20 target of reducing cost and ease of access of cross-border payments?
So firstly, thank you for having us here. It's a privilege to be here in Bangalore and experience this good weather for change. Firstly, just taking a step back, what is the G20 target on payments, right? So there are multiple parameters, but we have speed, access, transparency, and cost as some of the key parameters, out of which let's take speed. So the target is to be able to do 75% of the payments should reach the end beneficiary within 1 hour. But where are we on that is the key question actually, and what is the journey to get to making things actually simpler for people receiving money. Now, when we come to talking about cross-border, it becomes interesting, and I almost think it's important to understand what SWIFT does. Over the last 53 years, 53 years, SWIFT has been the backbone of the payment ecosystem. Just imagine a situation in 1973 when Japan and Germany had to talk over telex to do trade. There was a need to have a structured text which was electronic and standardized, and that's how interbank financial telecommunication started. That then became worldwide, and that then needed to be not-for-profit and cooperative. That's how Society for Worldwide Interbank Financial Telecommunication came about. Now, India has already done a very commendable role on the G20 presidency. There is a tremendous focus on it. But, if you look at there was a report published by SWIFT called the Spotlight on Speed report. This highlighted that while 90% of the payments which are sent to a receiving country reach within 1 hour between two banks, when it has to reach the end beneficiary, less than 50% reaches the end beneficiary within 1 hour. So what happened to that last mile delay? We've been seeing on our network that some of the top reasons for G20 delays or for payment delays as such is typically market practice. Market practice could be anything like interpreting the regulations differently, banks waiting to see that there is a beneficiary credit to their own account before transferring back into the beneficiary to the end beneficiary. It could be a lack of harmonization of payment purpose codes. It could be, it could be a multitude of reasons for which banks hold back money. And as SWIFT, our priority and our work with the G20 is to provide data, to provide reasons for friction, and to support with reasons of friction, and to work on this market practice with the community. So we have a whole series of activities that we do with our banks locally to work towards G20. Most critical of them being standardization and building interoperability at scale. Standardization through the ISO 20022 migration, which is something that's a big change fundamentally, which is being executed globally now. Harmonization of those standards is another piece, and regulatory harmonization. These are some of the things that we are doing with the community.
Thanks, Nandini, for specifically pointing out the efficiency piece, right? I mean, when SWIFT receives the information and how much time it takes to reach the end beneficiary, I'm not sure how many people in the room actually knew about it, but thanks for bringing that out. Now, coming to you, Dharshan, you being a CSP or a customer security partner for SWIFT, and you recently published a report with Ministry of Electronics and IT Certain about digital threat in the BFSI sector. Where do you see what are the areas or what are the gray areas when it comes to payment fraud, right? And how some of those frauds are creeping into cross-border payment space? and how you as an organization are dealing with that.
Thanks, Sharat. So firstly, the way we look at cross-border, I mean, I come from the cybersecurity space, so, and from a forensics angle as well. So one is, how do organizations in the entire ecosystem, are trying to, are playing into the best practices to make sure that their transactions are secure. That is one. And second is, I would just add an angle from a forensics angle, how cross-border payments really creates problem for us as forensic investigators, right? So first is on in the ecosystem. One of the key things that regulations and compliances obviously plays a very big role, and SWIFT's PSP is one such program which is well orchestrated to ensure that the members of SWIFT essentially fall in line with some of the best security practices. And such kinds of compliance requirements are usually mandated by all networks, and central banks. There are a lot of central bank guidelines and multiple, and we are obviously, when it comes to digital payments, is highly regulated for good reasons, and hence compliance becomes an extremely important role. So anyone who is in this space and wants to get there, compliance obviously is a big factor. Second is, you mentioned about the digital threat report, which we published with CERT, largely focused on how organizations today are facing digital threats, right, at the end of the day. So one of the key things that you need to understand is that when you're talking about payments, you're also attracting, it's a high value target for fraudsters compared to breaking into a Meta account or a Facebook account of mine. If someone were to break into my bank account, it's a lot more valuable than breaking into my Facebook account. So obviously we are a high target. Payments typically attract all the good attention from all the fraudsters, right? So there are criminal groups targeting, just to name Lazarus, if you had heard, famous North Korean group, which targets largely, which goes behind only financial organizations in the thing. So things like that have been covered. One of the key things that this is the first time that a large cybersecurity player in the forensic side, as well as the government, has come together. In fact, that was one of the flagship collaboration that we did with Government of India, with the and published a very important report. And we've been very mindful, being the first report that we published, we were mindful about what we should publish, and more importantly, what we should not publish. Because obviously we don't want to give a leg up to the guys who are going to, misuse that. But largely it covers, how AI is being used today, and how AI could potentially be used. We speak about quantum. One of the key threats to the financial ecosystem is with the break. I heard earlier panelists speaking about quantum computers and how technology is going to play a role. We spoke about quantum machine learning or quantum AI, which is going to come in, which is going to reduce cost. But for people in the cybersecurity space, we are all getting panicked about the fact that it's going to break multiple cryptographic algorithms that are being used today to secure the entire financial systems. But last but not the least, you asked me a very important point on why it's a nightmare for cybersecurity professionals like us. Because when we do forensic investigation, one of the ways in which to evade organizations, evade law enforcement agencies is cross-border. So basically, I defraud a bank, or and I cash out from a across the jurisdiction. So in which case, it becomes extremely difficult for law enforcement agencies to catch hold of the actual people. And the typical people who get caught are the mules, who are only playing to the accord of their bosses, who obviously are unknown to, for various reasons. So with this cross-border payment game being given a push, with thanks to the great push of cryptocurrencies in the US and all that, we have already started seeing high amount of ransomware attacks. And it is going to be used for nefarious activities and going to give people like us a lot of sleepless nights, is what I can anticipate.
Thanks, Dharshan. Now, Nandini, coming to you on the ISO 2022 migration. This is, again, as you rightly stated, is a fundamental change in the cross-border payment space. what is the readiness of Indian banking and financial ecosystem? What are the challenges and how SWIFT is helping them?
So firstly, I just want to take a point that Dharshan said. Cross-border payments is a very different landscape from domestic payment landscape. It comes with multiple territories, multiple regulations, currency exchanges changing. It's an extremely complex matrix, and there are so many gaps. They're not harmonized, and which is why frontier technologies are going to be the next piece that most organizations should be focused on. Now coming to why ISO and why it's so critical for the industry as a whole. ISO is a very foundational standardization. So if I have to simplify it in just your and my language, you have a drawer. It didn't have any partitions. Now you have a drawer with partitions, with labeling, with specifications, and with mandates. So you're basically organizing data in a very structured, very formal way, such that you are able to build on the capability of the power of that data. It allows for that data to work for you, to protect from financial crime, to build stability in the payment systems, and more than anything else, because it is foundational, like you asked me about challenges, I don't see it as a challenge, I see it as change. Anything that requires change requires effort, and the banking community as a whole, and not India, globally, is undergoing that change. There is a deadline by the November 2025 date, 22nd November, where SWIFT will require that all banks, certain systems will not be supported. So banks need to move to ISO 20022, that is the richer standards. That requires a lot of work. Banks do need to work with their back office vendors, their partners, make sure that they're not switching from format A to format B, but actually looking at, I need this, am I building it properly, am I able to actually deliver value to my end customer? So that journey of checking for that, prioritizing talent to work on it, getting leadership buy-in, and then working all of that backwards towards budgets and then execution is something that's important. But at the same time, SWIFT is supporting the community with a lot of pieces on interoperability tools. These are already available to the larger banking community, and it, how do I say this? There is a lot of work going into the community to make sure that our banks reach the deadline together. The good thing is that globally we are at a 33% adoption of ISO as of now, and we see large market infrastructures already moving. So when the market infrastructures move, the banks will automatically have will move as well.
I have one more question for you, especially on Project Nexus, which is again I would say a big project when it comes to cross-border payments, and RBI is one of the participating entities. How do you see the role of Project Nexus in terms of both multilateral and bilateral cross-border payments, right? And the usage of CBDC, how does that enhance security in cross-border space?
Project Nexus is just for the audience, what is Project Nexus? It is basically global instant payment systems are coming together and saying that if I'm in Singapore, so if I have UPI in India, my UPI will talk to your PayNow, will talk to your Indonesian instant payment system. So it's basically saying that instant payment systems around the world, 5, 6 of them primarily, will start talking to each other. And they'll be able to transact like how we do UPI with each other, right? So that's, I'm really simplifying it, but that's what it is. So see, first of all, sovereignty of rails and sovereignty of currency is something that is important to every jurisdiction. So we believe that is absolutely vital, and we believe that there is a lot coming on that front. In fact, it also is important from a concentration risk lens as well for us. So while that is coming, the challenge is not about the bilateral links or the multilateral links, but it is about the fragmentation that comes with it, which is why I again go back to ISO. ISO is a universal standard. The moment even our instant payment systems are on ISO 20022 IP plus standards, it allows for easier interoperability with other. So today we are only talking about Nexus, but if our standards are built, or if our it's like saying I'm going to build a road only for a truck. Why will I do that? I should build a road that any four-wheeler or two-wheeler or pedestrian can walk on. So if our roads are built for interoperable multiple use, then we are able to scale faster, our operations become faster, and which is what the focus should be. So being capable on ISO 20022 makes interoperability, whether to Nexus or whether to any other future piece, much better and more efficient.
Thank you. And I think the harmonization of standards will be key whenever there's a new payment rail or payment infrastructure, whenever that comes up in the future.
Faster. It will be faster.
Right.
Just one point to add on this one is that when we talk about fragmentation, there's a lovely report by The Economist which says that whatever way we see it, every time there is friction in trade, it results in fragmentation and drop in global economic growth. This global economic growth is estimated to be almost 6%, which translates to around 6.5 trillion US dollars, if not contained by 2030.
Yeah. Coming back to you, Dharshan, we have roughly 3 minutes left. So what your closing thoughts on what are the threat vectors when it comes to cross-border payments, especially using instruments like stable coins, right? Because they themselves are coming up as a new payment tool and infrastructure, right? And these nefarious actors, they are using that for laundering and so many illegal activities.
Yeah, so as far as stablecoins is concerned, I mean, it's once the Genius Act is out and those kinds of acts are out, I think those will provide a lot more accountability. Currently, at this point in time, it is outside the regulatory framework, which makes it very difficult. And obviously, evasion is a lot possible. But I think with Genius Act, stablecoins is relatively okay. But I think, but we can't just stop with, those kinds of cryptocurrencies, right? I mean, obviously there are multiple form factors, and so there are going to be off-railing which will happen outside, which will lead to a lot of nefarious activities, especially from a cyber threat standpoint, and that's what we believe is today. If you see all the extortions that are happening on ransomware attacks, I mean, I'm sure all of people know that the ransomware attacks have significantly increased over the last couple of years, thanks to the anonymity that these outside the formal systems like SWIFT, which is being used for such kinds of payments. So we see more such instruments being used for cyber threats and monetization of cyber data or digital data.
So thank you, Dharshan and Nandini. And just to summarize our conversation, I would say that harmonization of open standards is key, and because this will also lead to not only smooth flow of capital, but also enhance productivity of nations, right? So with this, we will conclude today's session. Thank you for listening to us and thank you for attending. Thank you.